Petrodollars are US dollars exchanged for crude oil exports. The deal, which was struck between Saudi Arabia and the United States in 1974 in the aftermath of an oil crisis, allowed Washington a steady flow of crude and a market to buy its debt, while the kingdom would get military aid and equipment. Experts say the development could bring about a sea change in the global financial order and shows that the dollar's dominance is no longer guaranteed.
The US-Saudi Arabia petrodollar deal, a pivotal arrangement in global finance, has ended after 50 years. This landmark deal, initiated on June 8, 1974, facilitated the exchange of US dollars for crude oil exports, bolstering the dollar's dominance.
Petrodollars are not a currency but US dollars exchanged for crude oil exports. The term, petrodollars, refers to the US dollars earned by oil exporting countries through the sale of oil. The concept emerged in the early 1970s and has played a significant role in global economics and geopolitics. Initially, the Bretton Woods Agreement of 1944 established the US dollar as the world's primary reserve currency, pegged to gold. This facilitated international trade and economic stability post-World War II. However, in 1971, US President Richard Nixon ended the dollar's convertibility to gold, leading to floating exchange rates and increased currency volatility. In the following year, the Organization of Petroleum Exporting Countries, OPEC, imposed an oil embargo in response to US support for Israel during the Yom Kippur War, causing oil prices to skyrocket. The US struck a deal with Saudi Arabia and other OPEC countries to stabilize the situation, where oil would be traded exclusively in US dollars. In return, the US provided military protection and economic support. This agreement marked the birth of the petrodollar system. In 1974, amid an oil crisis and skyrocketing prices due to OPEC sanctions, the US and Saudi Arabia struck a crucial deal. The US agreed to buy oil from Saudi Arabia and provide military aid and equipment, while the Saudis would invest their petrodollar revenue back into the US economy. This arrangement ensured a steady flow of oil to the US and financial stability for Saudi Arabia, benefiting both nations. With the deal's expiration, Saudi Arabia is now free to sell oil for currencies like yuan, euros, rubles, and yen, and is considering digital currencies like Bitcoin. This shift may accelerate the trend of using alternative currencies for international trade, potentially weakening the US dollar's global dominance. A decline in global demand for the dollar could lead to higher inflation, interest rates, and a weaker bond market in the US, reflecting a significant change in global financial dynamics. Experts say the US wasn't alone in trying to get Saudi Arabia on side. Everyone, in the US, France, Britain, Japan, was trying to get their fingers in the Saudis' pockets. Gordon S. Brown, an economic officer with the State Department at the US Embassy in Riyadh from 1976 to 1978, told the outlet.